Yeah, but no. So Billy, companies have been borrowing a lot of money for the past 5 years. Some level of that is healthy for the company to expand, right? But why is it going up, and what does it mean for the market?
I think when you talk about borrowings, you have to look into context for a bit. From my conversation with some of the fund managers, basically the first thing is that the last 5 years is where we are at a very low interest rate environment. So it makes sense to get into borrowing because it provides an opportunity. Like you say, debts could be good when you use it to grow the company, right?
Correct.
But what the observation at this point is that a lot of this debt are used to manage cash flow, because in the last couple of years, probably the last 2 years when the oil price collapsed, there are a lot of companies that have difficulty in getting payments. So they have revenue, but they can't get the payment, so their receivables gone up. So what happened is that they need to manage their cash flow, and so borrowings become the alternative that they go into. But because these borrowings are not used to grow their business, instead is to use to manage cash flow, so it becomes a case where your earnings remains relatively flat, which is what the data is showing, right? So what we're seeing in the last 5 years is that borrowings has gone up by about 80%, but earnings per share has been relatively flat. Yeah, at least for the KLCI.
Now net debt to EBITDA is about 150% up. You spoke to Don Lai from Ramsey, Sandran Berhad. He said that repayment would be cyclical, but what did he say next? So how did he explain it?
I think what Don is really saying is that because they're only starting to monitor the trend in terms of repayment.
Correct.
So compared to the first quarter and the second quarter, it actually takes a bit longer in terms of the average of the companies to repay their debt. So it is a concern in a way, but they're not sure if it's just a cyclical period where companies need a longer period to pay the debt because of certain issues at that period of time. So they need a longer period to look into it. But what they did say is that certain companies, different sectors show different characteristics. Some are showing growth in terms of they could actually repay the debt faster, especially the export sectors, some of those which are doing good, which is in line with what we have seen in our results as well. But basically what he's really saying is that there is a concern there, but you just have to keep monitoring at this point of time.
Yeah, and also probably we are waiting for the commodity prices to come back compared to 2 years ago. Now when we look at all these numbers, right, especially non-financial corporations to GDP, they're about 70% now.
Yeah.
And if you compare it with other countries, are we worse or are we better than them? Where do we stand?
I think on this, Moody's actually tells us that Malaysia is somewhere in the middle. We're actually better than a few countries like Australia, Singapore, but we are worse off than Thailand, Vietnam. So on average, we are at the middle. But the only concern that he did raise is that it shows that there is an increase, and that increase has to be observed, because if it doesn't translate into better earnings, then it should be a concern, right? But of course, there are other fund managers that actually pointed that this year, in the first and second quarter results, they've actually shown a reversal in trend. Danny from Arica Capital, he actually mentioned that in the first and second quarter, we actually see top line growth at a faster rate. So which is a positive sign, because then it helps companies to manage their cash flows. And out of this, we also see companies raising cash and also reducing their borrowing. So this is a positive signal in a way that companies they do take note of the debt level, and they are taking measures to manage it.
But when you talked about all these, you spoke to some of these economists and also fund managers, they are quite positive about the numbers coming in the third quarter and fourth quarter if you compare to second quarter. So where is this enthusiasm come from?
I think it's what they call the synergy global growth that is seen. I've talked to Alan Tan from Affin quite a lot on this. So he has been pointing to me that there will be a moderation in the second half, but it will still be a growth simply because everywhere else is growing, right? And Malaysia is an open economy, so it makes sense that eventually all this growth will help us one way or the other to maintain the sort of growth that we want to see. So it's about where we are.
Okay.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.